Good afternoon, everyone. Can you hear me okay? So I know you're probably sick of me in the free room and the chart patterns mastery. I'm dual broadcasting. I'm also doing live, I guess, on like YouTube or something. And all I'm doing in here is I'm trying to go as many places to humiliate myself at the same time. So I think I'm going to accomplish that. No, we did real well in Apple this morning. We did a crap tiny trade in an SPY butterfly, and that's about it because it's been so darn choppy. Now we had a mulligan in MongoDB. I told you I liked it. It came all the way back, all down here. Amazing that it came all the way back, and I didn't get in it. By the way, I got to share my screen. Let me see how to do it. I know how. This is for the YouTube area. There we go. All right. So, what are we seeing right now in the markets? Right now, what we're seeing is chop, just like you asked earlier. Which way do I think it's going to go? It sure seemed like it refused to go lower. Then the bonds rallied. It refused to go higher. I'm really into bonds, like you know. So, nothing has really gone on. The one interesting thing is to see the Dow Jones Commodity Index, which is one way to measure inflation, is not helping bonds. And that's because the bonds there was a reported 10 that was inflationary, but the markets don't care right now. Just keep that in mind. The markets don't care right now. So, right now, the markets are doing this typical expiration garbage. That's all it is right now is expiration garbage. Just keep that in mind. And all I'm doing in here is trying to stay out of trouble when you can't tell what to do yet. That's all I'm doing is trying to stay out of trouble. And there's a number of moving parts, but none of them are anything that's going to make you a lot of money or lose you a lot of money. Probably lose you more than make because you have things near that strike price we're harping on, but the market's looking pretty good. You know, advanced decline says it all, almost unchanged. So I thought number one, I'd go over my overall market perspective. I think that's one of the ways to go. And then I thought I'd show you a couple of scans and how I know a lot on simpler use squeezes, which is great. I like scanning for them, and I use that for bull and bear flags. So that's how I do it. But if you can combine it with support when the market's open down, yeah, you got some pretty powerful things there. So I want to show you all that. So the first thing, overall market perspective. What the heck do I think in here? Well, no matter how much you want to be bullish or bearish, you got to respect that number one, the market won't go down, at least not yet. But the other thing you have to respect is when I do this, and I know I saw a lot of you on the chat talking about a kind of squeeze in the ES. Just keep in mind, I don't just use that because there are times it doesn't work. So, but when I see that kind of pattern and you're an options trader and it's getting that tight, there's no way I'm going to do like sell a straddle. You can't just go and sell a straddle because it's going to pop a lot one way or the other. Now, I know that's a squeeze, but it's also a tight consolidation here. So I'm trying to combine two things. Now, when it comes to everything else, let me see. Oh, let me show you. So I'm going to put this just on 2 grids, not on 6. I'll go back to this later. So when you go to 2 grids, now you might ask, why do you have 3 grid and you're using that? Because I have so many 2 grids, I forgot which was which. So I just made it 3 grid. All right, this is what I want to show you. Regardless of opinion, that's what we have to watch right there, that channel. Now that's an hourly chart, but as you see, it's acted pretty well. So you got to watch that channel. What else do you have to watch? Go into a 4-hour chart. Now, keep in mind, I know I've mentioned that I like on futures to use a 4 hour, a 1 hour, a 15, and a 5. On indexes, I like to use just daily. I mean, for let's say when I look at MACD versus it and ATR trailing stop crosses, a number of things. But this is what you're going to see in here is on the one hand, this might be a big old wedge. But on the other hand, it sure could be a little channel to the upside. That's the tough part. You could take it two ways in here. Now, usually the way I do it is when it's at the top of the channel right here, I'm going to go from 5 minute to like a 1 minute and see if there's a reversal pattern. So we don't have that. So, just keep that in mind. I have no idea about the next week or month. Right now, the market's so darn choppy, you have to just trade like ultra short term. Ultra short term, but it's a good question. Is this going to break up? That's a big question. Right there. Is that going to break up? Or are we going to trust the MACD on a monthly that got killed all last year and has now worked off the MACD by being overbought? It really didn't have any upside progress. So in answer to your question, I would rather play ranges. So if we're at the top of 4,100, 4,200, I want to lean short. But when it looks like this, Craig, I want to look and find a shorter term reversal pattern, whether it's a day, a week, and that's what I wanted to show you. This sure looks like a rising wedge, but I've gotten in trouble anticipating those things. You got negative divergence where you have the next leg up is on lower momentum. No doubt about it, but it hasn't broken yet. I've seen this go where it goes like that. So in answer to your question, longer term, I'm really bearish. So but and I don't want to screw you up because you could go to 42.50 first. It just seems to me that if you get up to that upper echelons, we can look for shorts under the market, but you really need to see a reversal candle because in the grand scheme of things, it's been very rare for something to gap down. What's worked a lot better is when you have a break of something like the ATR trailing stop or a 50 or 200, you break, then you have a consolidation. So, I mean, that's what I'd like to see if I want to play to the downside. You don't see it in here. This has been garbage now for months. So, definitely you don't see a sell yet, but you did back here. That's what I'm looking for right there. And sure, I'm going to miss the first 100 points, but you made the next 500. The other thing, a lot of times you get that back test. That's even a better short. But right there, when it back tests, you got to look for the intraday reversal signal. So, and I'm happy to go over that. That's a great question. So that's on September 13th. So I don't want to just slough you off and say, I have no idea. I want to be really bearish, but I don't have as many reasons yet. So let me give you some of the reasons when this happened, when that happened. So we're going to go back on demand to September 13th. I think it's September 13th. I'm looking in the upper left up here. Yeah, September 13th. And we're going to go to on demand, but we're going to go to, let's say, September 30th. Now, keep in mind, into October, the market got destroyed. So just keep that in mind. So here we go in September 30th. So what are you going to notice? So you had this sell-off here. You broke that daily ATR trailing stop, which I really respect. Henry had a really good video and a good session on that last Saturday in the micro voodoo lines. You had that topping formation. Then you had where you broke. The first break got oversold. And then you rallied on a big overbought rally right to the ATR trailing stop. And it was overbought. So you might say, yeah, but that's hindsight. I would have gotten stopped up here. Yeah, maybe. So let me show you the shorter term way to initiate it. At least this is the way I'm looking at it. So the way I'm looking at it in here is this. This is September 13th. Just keep that in mind. So on the left, I'm going to put that September 13th. You see that reversal candle. We can even take that day because we already know it sold off. It rallied and got overbought at resistance. The key is then, when do you initiate? So let's go over here and put an hourly. But I really should just go to September 13th. It makes it easier. So we'll put September 13th. Now, this is 24 hours, so you might not see it in here. Yeah, you see it. There. So when I see it up at the ATR trailing stop, right here, and overbought, then I look even shorter term for a reversal pattern. Now, that's a little rough right there, and that happened before the opening, which is always a pain in the rump. That's 120 points before the opening. That's not exactly fair. Yeah, that's almost impossible. But the moral of the story is, believe it or not, that was just the beginning of the sell-off. I know, and you know, that we would have been pissed off we missed it and given up. But that was your sign of a reversal. I guess that's pretty obvious. Now go to October 15th. And the whole key is you want to get in the correct direction, not at the correct price. Not perfect. You just want to be sure the direction is known. So there's your reversal candle. Right here, that we would have been pissed off. 4,000. Yeah, we missed 100 points. But that's a decisive sell-off. And what happened? It went from 4,000 to 3,600. So I'm just telling you, you want to look for your pitch on these, which means look for reversal and then look even shorter term where to initiate. But you want the direction right. So I just can't stress that enough. Now, why does that come in now? Because now, if I'm bearish, heck, I don't have 3 reasons yet. All I have is that longer term I don't like, and this could be a wedge. But you just don't have that kind of reversal yet. Just don't have that reversal. Even though I want a reversal, you don't see it. Nothing in here looks like a reversal yet. So you might say, yeah, but it could gap down because of earnings and all that next week. Well, one way I do it is I'll try to buy something as a spread under the market if I want to be stubborn. But when I don't have enough reasons, I better be long some stuff, or I'm not gonna chase. I mean, I'm not gonna just blatantly buy short something. When it's in this kind of zone, I got to have shorts and longs. That's why I showed MongoDB and showed how good it looks. Yeah, we missed it on the opening. We got a mulligan after I got off the free room earlier where it back tested that line. We just talked about back testing. There you go. It looked terrible right there. Yeah, it went straight up. So some things I'm looking to buy, they have earnings, and so does ServiceNow. That, to me, even though it doesn't correlate perfect, it usually does matter. That whole group, it matters. So the thing is that if I see something that looks good, yeah, we could do something in there above the market and do something in the indexes below as a hedge. Now, let me show you why I want to do it as a hedge. As you asked a good question, do I ever do a long versus short? In this type of environment, yeah. When the bond market which led the stock market all the way down last year, when that went to a new low, so did the NASDAQ. But when the bonds right at the beginning of the year had this little twerk down, probably about a 50% retracement, the NASDAQ didn't hold up. It tested the low. To me, that's a positive divergence. It's not going to take a lot for the NASDAQ to explode. On the other hand, you have the opposite. You have the bonds stuck in the mud at that red line, the beginning of the year, while the NASDAQ is where it was in August. So that's why if I buy anything, I have to have short hedges, because this just isn't right. So it doesn't mean to blindly go short, but what it means is the thing that made the NASDAQ go down, which is that, is down here now, but the NASDAQ's up here. So if I do look at NASDAQ stocks, I have to take the ones like the MongoDB with good charts. And I got to find hedges. I just can't stress enough, you got to have hedges. So, and like I said, if I wanted to be blindly bullish, or bearish, I just think in this type of market where you're getting negative divergence and the monthlies are overbought, I just think you got to have downside protection. So you can have longs or shorts. Today, you would have cleaned up if you were long MongoDB and short like the ES. You would have lost a little here, made a lot in the other. So just keep that in mind. So where am I going to go now? Well, the first thing is the bonds are near their low. So do we play the NASDAQ just today? I don't know about that. So that's one thing. The second thing in here, how do you find stocks to buy if you're bearish on the market? As you see, yeah, that's why I'm not short. So I'm long GNRC. It's a hurricane stock. That's not the best piece of work, but I'm long that, and I'm short CMI and economically sensitive. So these are going way out, May, August, because I'm not sure. So just keep that in mind. So why GNRC? Why would I pick a generator company? Now, a lot in the Chart Patterns Mastery know what I do in there is I'm looking at historical tendencies, and go and look at GNRC. And this to me is an amazing thing. All right. This right here, right there. See that big rally? That's the beginning of May, May 11th. Just remember May 11th. That's 2020. All right. How about May of 2021? Guess what? May 11th. That's not a misprint. The exact same day. How about 2022? May 11th. You can't make this stuff up. Now, that might not look like a big move. That's 100 points. The last three May 11th, this stock's gone up. I just find that fascinating. And if you're wondering, the end of hurricane season, it craps out again. But that's just amazing. So that's why we have spreads in there that are specific for the Chart Patterns Mastery. But it's really cool. That's why I'm long it. Because even if the markets get killed, this could be outperform. So that's why I'm long one thing and I'm short another that got overbought at resistance. So you see it's overbought at resistance. We put that in there a week ago. So that's why I'm short this, long that, because I'm not sure which way to lean yet. So I just want to make that clear. Now, what else am I going to do? Well, when I'm long short like this, but I watch the bonds down, the first thing I have to do as I ramble on is definitely go over intraday trades. That's the first thing you have to do here. And the first intraday trade I do is probably Google, betting on it going to 105. So earlier today, we were talking about how to scan for open interest. So now, is there a low risk way to play Google. Because, I mean, to be honest, you short 100 shares, that's a lot of money, 10 grand. So can you buy the 106 puts? Yeah, 55 cents. What are you going to lose if it goes to 106? $55. So I'm going to go and look at those. That's the type of thing I'm looking at. Something that's in the money, doesn't have a lot of premium, betting on this going to 105. I'm not doing it right now. I'm giving you an example. So I just want to give you an example. The other thing, so that's the kind of stuff I do for today. Just to let you know, that kind of idea. And amazingly, they're already up 5 cents. Yeah, these get pulled so quick. So if the NASDAQ wavers whatsoever, yeah, this will probably get sucked down to the strike price. So just keep that in mind. Those are low risk ways to play. Just low risk ways to play. So that's one of them. Betting on these things going to unchanged. Unfortunately, not going to get anything in there. Is a gallon effort, good idea, not good execution. And I didn't get it. But that's betting on it going down to here, going down to the strike price. Now, if the bonds were up 10, I wouldn't even think that. But with the bonds on their low, I think it's a pretty good risk reward. So that's one of them. Now, sure, this could go to like 8 million. No doubt about it. But if I'm going to play anything, it's going to be something that that at least it's a theory that even if the markets go up, it could go down. Yeah. So next thing, now that we're looking at this, how would you play today? So I'm not saying to do a specific idea, but how would you play today? Well, number one, if these bonds are on the low, I'm going to look for in on the short side. And there are a number of ways to do it. I don't want to get too complicated in here, but one is you could just short the SPY. That's always a dangerous one because it could go up so fast on you. Another one is to short the QQQ. Another dangerous thing is heck, you don't know when it would stop. Now, I know there's negative divergence and all that. So there are a couple of ways to play. We still have an hour and a half. One of them is this. You can go and just buy a put. You can just go buy a put like the 317 put. The problem is they have 40 cents. I mean, they're 40 cents. So that means it has to go to 316.60 just to break even. That's a bad risk reward. So, I mean, that's just, you don't have an edge. So which one looks the worst? Let's take that. Let's take a 1 minute chart. Well, I think you see the SPY. But how would you play this? Well, one of the ways, like I said, is just go in and buy a put. That's the riskiest. The other is when it's this late in the day, I just don't see a spread to do. Now, you might say, why don't we buy the 318 put that has already hardly any, try to say that quickly 3 times, has hardly any premium. The problem is I'm not going near doing that until I see a real bear flag. So I'm not doing that. The only reason I'm showing shorts is because the bonds are on their low. That's all. So just want to show you that the market earlier looked like it was going to completely dismiss the bonds. And then it fell like a rock. So to me, the easiest way is to try to play something to the strike price. I mean, that's what it looks to me. So that's one way to do it. As you see, there goes Google. So I'm telling you, if this NASDAQ on the upper left is only up, let's say 19, yeah, this might get sucked all the way to the strike price. All these if thens, unfortunately. All these if thens. So the Google we're talking about today, I haven't done it, but it's just that's the kind of thing we do of where you're not sure what it's going to do, but it's a lot easier to just play it to the strike price. And those were 55 cents. So all you're doing is betting on this going to the strike. You're also betting that the market's going to go down, but at least you're buying something with no time premium. So if you buy those at 55 cents, if it goes to 105.30, they're 70 cents. There's just no time premium left. And sure, that could explode and you'd be dead wrong. But it just seems to me that if you're going to play that theory that the NASDAQ is going to get pulled down by the bonds, and if the NASDAQ gets pulled down, the open interest ones are going to go down. That's just the theory. So, and that's a cheap way to play a theory. So just want to show you that. Okay. On the other hand, what do we do with scanning? So let me show you what we're talking about. So we're talking about the market could go up or it's going to go down. Yeah, that's all you need from me. Isn't that a real help? But no, what I mean by that is the markets haven't shown a decisive break one way or the other. That's all I mean. Haven't showed a decisive break. So when I see that, like I said, I'll look for stocks that look like garbage, but I got to find long ideas too. So the best long ideas are things that are in an uptrend and are consolidating. So let me just show you a couple of them. And they stopped at support today. Now, if the markets get killed, yeah, it's not going to work. So that's why you want hedges. So let me give you a for instance of how I scan for them. So I could take 8 million stocks. I'm just going to take my main list. So if you didn't get it earlier on the free room, let me give it to you again. And by the way, has anybody, this is way off the track, but we have a big old yellow jacket in the room with me and I can't get it out the window. Has anybody seen that Bean episode with the bee? Yeah, that's how I feel. I sure hope I don't, I hope I don't go crazy in here. All right. I shared this earlier. This is my main list. The reason is I'm trying to take the most liquid stocks, but I change this all the time. So if I see like something that's really starting to be volatile, like when all GME and AMC, I'll add those to the main list. Once they die down, I take them off. So here's my main list watch list. And there's a method to my madness. I'll just show you. There. I've been in GNRC for 10 years. So ever since I was with Simpler, I have a hurricane watch list. But when I pare it down, the only one that seems to work is GNRC consistently. So that's the only one. There, you could put in like Seagram's because people are going to be home drinking more. Or you could put Procter and Gamble because people stock up on toiletries. But the other one I made money in, I don't know, the first chart that I posted in TradingView, like TradingView was around for like a month, was Hormel. And I did the headline Hormel equals spam. Now, this is sort of esoteric, but you had the Hurricane Sandy on the East Coast a while ago, long time ago. Terrible. But East Coast is more known for eating spam. So guess what? Look what the stock did. Yeah, spam. And the best part is I posted it down here. But yeah, Hormel and Span. Isn't that amazing? So I'm in there. Well, I'm not telling you what to do in there because you have earnings coming out. It's extremely risky. So the best way to play is usually with something like spreads because sure, it could implode on earnings. So, but Hormel's another one. There's only a couple that I really trust. Just to let you know. So just want to show you that. So the first thing though, there goes Google. And by the way, I'm just so you know, I'm not TG. So, but getting back to it is what else am I going to do? Well, first, like I said, I want to look for things that might go up no matter what, like GNRC. The other one is I'll scan and I'll scan for daily squeezes. But I want a squeeze if I want to buy something. So let's say overall I'm bearish, but I have to have a hedge. So, I mean, I have to find long ideas too, because decisively the market hasn't broken to the downside. If you had big break to the downside, I would only look for bearish ideas. So, I mean, definitely keep that in mind. So, this is what I do. I want to take stocks consolidating in an uptrend. Now, let me just tell you, JC did this one, and I'm not going to show the exact trade, but I want to show you how to reverse engineer and scan it. So here's the stock he's in. You see on how it got pulled down because the NASDAQ went down, but now it's at great support. Right here, great support. And had a nice reversal candle. So how did you find that? Well, number one, it's in a squeeze. So I could go and show you this. And I'll come back to this. I just want to show you. I took six time frames. There. So you take it on a daily, you got that big old squeeze down here. Like I said, you still don't have a tell of, is it going to be up or down? But I'll show you one way to do it. So the first thing is probability. So the probability, if it's not overbought and it has a squeeze and it's over the ATR trailing stop, the probability is you could buy it near support. So that's one way to do it. So if you go in my scan and you take every stock I have in my scan, yeah, I'm just I sort of knew what you were talking about. I just thought I'd rib you a little. So I hope that's okay, Apps. But this is one way to do it. I have a lot of daily bull scanners. I want to find the right one for you. I'm going to have to put 4-hour and then change it to daily. I'll show you. There. All right. So I put bull flags, but I want to show you on how I did it. I wish I could get rid of this bottom thing. There we go. All right. We're going to not take all stocks. We're going to take my main list. And like I said, I change that all the time. We're going to take off the price range because we're taking just my main list. Make it real easy for you. You got a daily bull squeeze, and you got that stock is over the ATR trailing stop. That's it. And I'll save that for you. Now, you might ask why I spell so bad because I'm trading. So just keep that in mind. Daily bull flags, I'll just put April. There. The reason I do that, it resets. So I got to go and put back in daily bull flags. There. So all I'm doing is taking stocks that are consolidating over their ATR trailing stop. And the reason I'm doing that is, and you're going to laugh, I'm pretty bearish, but I have to have some long ideas. That's all I'm talking about. So when you scan that, there aren't many. So what's in there? Super Micro, Nvidia, Netflix. I don't know about Netflix as it got hit, but here's some of them. Roku. So somebody asked about Roku earlier. So these are stocks that are consolidating over their daily. So you could go and put Adobe. And by the way, where's Google? I got to look. Oh, where are those puts? I got to look. As you remember, I'm trading in the background here. There, 84 cents. So that's a pretty good return. There. Just want to show you that in there. So the whole idea is when the bonds are down, you got to think the market's going to settle down, which it did. Settle down. Doesn't mean it has to go down, but it settled down. The whole idea is these hit that top band. So I just want to show you that because we are trading in the background. So that was a beautiful thing that the bond sold off and the NASDAQ just started taking a dive. So what do? You play the stocks that are near their strike price. That's a beautiful thing. So you don't, even Nvidia, all of them that have a big strike price under the market, that's the better way to go. So NASDAQ, you might have made 20 cents. This, you almost had a double. Well, 50%. Let's put it that way. So pretty cool. And like I said, on the Chart Patterns Mastery, I'll be on a 3, but for now, I'm devoting the answers in the chat to the free room. So just keep that in mind. So no idea about the VIX, JR. The VIX is a pain in the rump because so much of it is hedged. But I'll tell you right now, one of the worst strategies I've ever seen is buying the UVXY or buying VIX calls. So it's a lot better to go in and do like calendars or butterflies if the VIX is high or directional spreads. But the VIX, I'm telling you, it's just so hard. I know there's that guy 50 Cent that buys tons, like $50 million worth of VIX. And I'm telling you right now, if I see that, then I'll short the QQQ. So I just hate trading the VIX. So in there. But getting back to it. So now you have that I'm relatively bearish because the divergence between bonds and stocks, but I don't have a decisive sell yet. Sell signal. So what would I do? Like I said, I'll mess around with the SPX, the SPY, anything like that. But I want a couple of longs sprinkled in, just sprinkled in. So let's go to it again. So we go into any stock that has earnings that's above the ATR trailing stop and consolidating. Why? Because you want to get out before earnings, but the earnings options will keep premium, and you're going for that quick pop. You're going for the consolidation to break to the upside, and you make a lot bang for the buck. So the first thing I'm going to do is I'm going to go in and show you some of the stocks that have bull squeezes that are at support. You got to combine it with things. So let's take Costco. Now, I know in the gold room, one of our commentators just kicked butt in Costco. So keep that in mind. There's your Costco. So it got over the ATR trailing stop. It did have a squeeze. It's over the ATR trailing stop, and it's at support. The problem with this is acting like garbage the end of the day. Now, why? Well, let's see if there's open interest somewhere. No. Remember, this was 510 today. The NASDAQ is near its high, and the stock sold off 3.5. Doesn't give you warm fuzzy. But let's see what earnings are. I know they're a late earnings, late bloomer. So it can be about setup. You don't have to do it today. But this is, I guess, the theory that buying at support right there in the 503 area. Then you go in and you look at when earnings are. You almost don't have to look on the chart. Look if the volatility pops 1 week. That's all you're looking for. So let's go back and see when the earnings are. There, May 22nd. So that if the markets have sell-offs and this holds its support, then I'd look like at the June 2nd, and I'd look at something out of the money. So like the June 30s, because they're going to keep a lot of premium. But that's one way to play it. Now but I would not buy premium even if it includes earnings if the stock didn't have a tight consolidation, because it still is going to lose a little time premium, but that's why you want a quick consolidation, a quick rectification to the upside. Like I said, right now, I'm not sure. But if the whole market dives, yeah, right there. Probably try to initiate something on the short side. I mean, on the long side. Keep in mind that if the whole market craps out and you're already short and you want some long idea, right in here, you look for a reversal pattern ultra short term and then plow in and buy it. So what am I talking about? Go look again at SMCI. Oh, you had a squeeze on a daily. You had the whole market take a dive on the opening. And look at the candle. So you were already preparing to buy that stock if it got down to support. So then you go to like a 2-minute chart, and was there a reversal? Damn right there's a reversal. Look at that. Not only did it get over the ATR trailing stop, but it formed a bull flag. When you see that, sure, you could go and buy some out of the money calls, because you're combining a reversal pattern, with a daily squeeze. So just want to show you that. So this looks like Costco, except it's already had the sell-off, the support, and the reversal candle. So just want to show you that. So, but that's an idea of scanning for tight consolidations or bullish formations. So keep that in mind. Aaron, are you still in here? I think you were talking about when are the bonds mattering. Well, when they were down 5 and the NASDAQ hardly went up, we were going on the point of no return. That if the bonds closed on their low, then that NASDAQ is selling off. And the best way to play it is something that has big open interest under the market. So I was combining that with that with that. You could have taken Apple also, but that was only like 30 cents. And now you see the writing on the wall. Totally different market than when I got on. So you got this. You got that it went up, it touched support just like SMCI did. And then it rallied, had that little wedge, then the little head and shoulders top, crossed the ATR trailing stop. And guess what? That's 4 points. That's a pain in the rump, but it keeps you out of trouble of buying. So the ones I showed you are buying are just hedges against if I'm bearish of the overall market. I have to have some long sprinkled in, like you saw MongoDB. And now, if the bonds stay down here, I wouldn't be surprised to see the ES all the way down to here. So hope that helps. So the other thing, you see a mile away. Yeah, we were talking about that earlier. If the bonds are down enough, the NQ is going to listen. Plus, the NASDAQ 100 is just 100 big stocks, and all the big stocks had strike prices underneath. Yeah, I can. Sure, about the MACD. Now, just keep in mind, a lot of people use different oscillators. So it's all about just having an oscillator so you recognize overbought or oversold. By the way, there goes Google to the strike price. Apple to the strike, Microsoft's next. So just keep that in mind. But sure, I'll show that. Let me get a better chart that's more clear. But like I said, the only reason I'm looking at long ideas is if I'm short and I don't have enough reasons yet. That's all. So let me show you the MACD. All right. The only thing about the MACD is this all started with the MACD mattering and the 50-day from this company called SMR Charts. And let me give you they're defunct now because I used to get the chart slid under my door every Sunday night that they updated, before you really could get it computerized. But they went under because you didn't need them anymore. But the interesting thing is the website's still up, and you'll like this. So here's SMR Pro. It's really defunct. But one of the best people is Marty Schwartz. So the Pitbull Wall Street champion trader, he's used it as long as I have. So in fact, I'm in here on testimonials somewhere. So this is what I wanted to show you and answer your question, Jammer. Just go to the free training guide. This is, I mean, don't laugh. I look at it all the time. It's not a virus, I promise. But what it's doing is showing you this. So that's the 31016 MACD. That's the 49. They do a 49 simple. All they're doing is when it gets overbought in a downtrend or oversold in an uptrend. That's all. Now, the reason I mentioned about the MACD is so many people have ripped off that 31016 and called it their own. So when you go into, if you go into Thinkorswim, there's a million of them, they call it. Just go to MACD 2 lines. And what you're going to see, that's it. MACD 2 lines. And I'm using 31016 simple. So let me take a screenshot of that and show you. And like I said, any oscillator will do. All you want to do is not sell when it's oversold or buy when it's overbought. It's more a timing mechanism. You can use it for like negative divergence and all that as long as you combine it with other things. So let me do this. There, those are my settings if it works. Let me see if I get it to work. There, those are my settings. But I'm telling you right now, you could use a stochastic, you could use an RSI. They're basically the same. That all they're doing is showing you initiation times, just like you saw it in the ES with that on demand for last September. So it got overbought back here. Remember that? And I bet if you go in there and you look at RSI, any of those, it'll work. The other thing, and you're dead right, what the heck does the blue line mean? The blue line is a longer term oscillator. I don't use it verbatim, but the SMR says that when this is below zero, the blue line, and it's not pointing straight up, and this gets overbought and crosses it, the real short is when it crosses it. So if you're wondering, that corresponds to right there. Not bad. That's about where we sit. And sold, as much as I look to see if it's overbought, oversold, and then look for a reversal pattern. One of the biggest mistakes I've seen is it's overbought or oversold and think that's automatically a buy or sell. That's when I look for reversal patterns. So yeah, it's just ZB/ZB Orlando. Yeah, it's hard to see in there. So let me put it here. And just to give you like a little hint on our site is if you're watching from the phone, I would definitely get a pillow because I'll put you to sleep. So I'm just telling you right now, you got to have a pillow if you're listening to me at home. So that's one thing. Now, the other thing, definitely I don't use it verbatim. What I mean by that is if you see the ES overbought, we're talking about 15 or 5. Yeah, you see it overbought. That doesn't mean it can't go higher. You can combine it with things, but I go on probability, and the probability it will stay higher even if the MACD isn't that overbought. The probability is not that high if the whole bond market gets hit. So I'm trying to combine it with things. Just want to let you know that. So definitely combine the MACD with the ATR trailing stop that Henry talked about with other criteria. And that means whatever made the markets go up, like the last week, if all of a sudden they're on their low, yeah, you're looking now to short rallies until proven otherwise. So, I don't know if it is for the E-Trade. I'm sorry. I just don't know on there. I'm sorry. And let me just tell you, I've poo-pooed that whole idea about pit bull lows and all that stuff, but I have it in the back of my mind. It's like Fibonacci's, like Gann lines. The more that somebody watches things, the more it's possible it works. So that's why I love the 50 and the 200, because so many people use it. So, but I'm telling you that that guide is pretty handy. So in there that I showed you. And then you'll look at this. Like I said, I combine it with other things. So the second the bonds sold off, you look for the stocks that have open interest under the market. I mean, at least that's how I do it. So look what happened to the stocks that have open interest under the market. That's pretty cool. All of these, every single one went to their open interest or close to it. So, and definitely if you see the market's overbought and you see the bonds sell off, then I'm not chasing MongoDB. So I hope that makes sense. I mean, that's another piece of the puzzle, so to speak. So I hope that helps. So right now, what do I do? Well, right now, you hope you can wash, rinse, and repeat this again. You still got an hour. And like I said, I know it sounds like a broken record, but it's percentages. So if the bonds are on their low and the NASDAQ's like short-term overbought, which it was, the probability of it going to a new high goes down dramatically. Now, this is definitely negative divergence where you have loss of momentum. But like I said, I've seen that go on a long time and not work. But if you could combine it with some other criteria, it helps. Bonds on the low, yeah, I'm going to look for shorts the last hour. So, like, that's what I'm going to do. Yeah, the problem with that, and you're right. So, are there algorithms out there messing around with the ATR trailing stop? Well, there you go. You were just talking about, when can you buy up there? Well, when you hit the ATR trailing stop and you're oversold, let's say in a 5 minute, um, yeah, you probably, and at support, that's a toughie. So if this gets back up to here and the bonds are still down 13, then I'll play it to the downside. But yeah, you're right. But yeah, though it's all again probability. So I do not want to short the ES when it's oversold at support, but bonds on the low might win. I know that's sort of waffling. I don't mean to waffle. It does keep you out of trouble of buying ServiceNow or something. Now, this is the other thing. If the bonds are on their low and the NASDAQ and everything is like consolidating, like working off its oversold like garbage, yeah, I'm going to get more bearish. But the problem is that move has already been done in these four. So then you got to find more. Now, what was the other one we talked about that had big open interest? Airbnb. Yeah, there you go. 115.80, 115. Now, another thing with these, when I play that kind of trade, I do not want to play when they're 2.5 point wide. What I mean is I'll play Apple with stock, but I'm not buying a 2.5 put, a 167.5 put. That's just too darn expensive. Then I'll just play options. On the other hand, Google had a onesies, every one strike. So 55 to 87, and there were just 90. So right to the strike. That's a beautiful thing. So, but you're right. Definitely right in there. So everybody take care. I have to go. I hope this has been enlightening and exciting. I hope I didn't put you to sleep. So take care.